Welcome back to Squawk. Amazon used an algorithm to test how much it could raise prices in a way that its competitors would follow. That's according to some redacted documents from the FTC's antitrust suit against Amazon. The algorithm was codenamed Project Nessie. The complaint says the algorithm raised the prices on certain items and monitored competitors to see if they raised prices to Amazon's level. If they didn't, it returned the item to its normal price point. A source telling the Wall Street Journal that Amazon made more than $1 billion in revenue through use of the algorithm. An Amazon spokesperson says the FTC's allegations grossly mischaracterize the tool, calling it a project to try to stop Amazon's price matching from resulting in unusual outcomes where prices became so low that they were unsustainable. The company says the project ran for a few years on a subset of products, but didn't work as intended and was scrapped several years ago. Part of this whole debate is whether Amazon basically is forcing third parties to match their prices, and because they're forcing them to match their prices, what that does to the prices at all the other retailers, and therefore how they track all of that. So the good news is that if you're on Amazon, you might actually be getting the lower price, but is it really the lower price if they're jacking the price on all of the other sites to create the lower price? And Lena Khan would say the idea that Amazon's able to have the lowest price and the others are and third parties are willing to have higher prices elsewhere suggests Amazon has a unique market power because you want to be at Amazon over all of the other places. It's actually, I will say,
convoluted argument.
I would say on that front, it's one of
than what Walmart or anybody else.
It's one of the well, I don't know. I think it's a unique argument, but it's actually, to me, it is one of the few demonstrations of the power that Amazon appears to have, which is that third parties are willing and happy or happier to have their stuff on Amazon at a lower price than they are anywhere else. And that
it's a market you don't want to miss. I think that's a clear argument, but you would say the same for Walmart?
Well,
lots of
no,
times you would
because
say
that's
Target at different times.
But the point is that if you're willing to have a higher price on Walmart.com or on Target.com so that you can be on Amazon, it means that Amazon actually does have the power.
No, I just mean in the stores. Like in a Walmart store, they've always talked about everyday low prices, and they have been pretty brutal on their suppliers to say, you are going to have the lowest prices with us. We're going to make sure, because they can deal, because they're so big, they can deal with a much thinner margin than other retailers can.
In-store.
In-store.
Right. And so this is the equivalent of that.
Yeah, but that's what I mean. I'm just pushing it back to practices that the biggest competitors have always kind of...
Right.
We are able to offer lower prices because we have the mass. And as a result, if you want to be a supplier with us, you're going to have to agree to give it to us at these low prices, and we're going to have super low margins. I get the online aspect of it. They're just doing it online. But the idea that the project was scrapped years ago kind of weakens their argument, too. That they've already gotten rid of the project. It wasn't really working.
We'll see. But I do think that the other piece of it, forgetting the project piece, the idea that people actually are willing to have higher prices elsewhere. It's not, by the way, just that you'll have the low price at Walmart. It's that you're also willing to say, I'll have a higher price somewhere else.
Yeah.